We will make a start for this session. So I am Mark Zirnsak. I'm the Secretariat for the Tax Justice Network here in Australia, and I'm also the Senior Social Justice Advocate for the Uniting Church in Victorian Tasmania. This particular panel we're doing a little different. You'll get 3 set pieces and then opening up for questions. The reason for doing that is for international taxation matters, it felt more sensible to allow each of our panellists to give you a piece of their work and a piece of the puzzle and putting it together because it's all quite different in that sense. So quickly, a bit of scene setting. So in 2013, the fledgling Tax Justice Network of Australia released a report, Who Pays for Our Commonwealth? And that sent a whole lot of the corporates and some of the right-wing columnists into an absolute frenzy. I'm sure there was no connection between News Corp's tax dodging activities and their columnists thinking this was the worst thing that could possibly happen. The main author of that report was Jason Ward, who is on our panel. At the time, he was working for the trade union United Voice. He has subsequently, if you checked his bio, reached out and formed a new operation, the Centre for International Corporate Taxation Accountability and Research, CITAR for short, and does a lot of investigative work into corporate tax dodging, both here and internationally. That report did, though, so that report, Who Pays for Our Commonwealth, did lead to the establishment of a corporate tax avoidance inquiry in the Senate, and a shout out to Senator Christine Milne and Sam Dastyari really led that, but all the senators on that were absolutely merciless in holding corporates to account. We had the Liberal senator groaning every time a corporate executive made some outrageous statement about how they didn't possibly know anything about their own tax paying or financial transactions. The other thing that happened for us was in 2014, the G20 was held in Brisbane and its focus was on global tax evasion. That led to a huge amount of pressure on the government at the time, and it was Joe Hockey who was the Treasurer. And we saw between that period, 2014 and 2019, a swathe of legislation has been passed to deal with tax cheating by multinational corporations in Australia. A lot of those reforms are focused on transparency, with some also dealing with increased penalties, making them more meaningful, and closing some of the loopholes that have existed there. 2 really significant pieces that have happened globally, though, around that time was automatic exchange of information between tax authorities, which affects wealthy individuals, so it makes it harder for them to hide their assets without their home country knowing where they are, and also tax authorities between themselves sharing reports that indicate where companies are actually doing business, maybe where they're making their revenue and where their profits end up. And that allows tax authorities to look that, if 75% of your business is in Australia but 90% of your profits are in the Cayman Islands, there's some problem going on here that's worthy of tax authority investigation. This last term in the Parliament has been dominated by dealing with tax advisors. That followed in the wake of the PwC scandal. For those who might not have picked that up, that was some people in PwC thought it was kind of okay to take government information that you'd signed a confidentiality agreement over and basically breach the confidentiality and use it to market tax schemes to your clients to help them avoid new tax measures in that space. And a shout out here, they would have probably got away with a slight slap on the wrist, but except for the work of Senator Deb O'Neill, Barbara Pocock and Neil Chenoweth at the Australian Financial Review, who really didn't let them escape. And we've seen a whole raft of legislation come through to deal with tax advisors at the moment. That's a really important part of it. Those small group of tax advisors, I don't want to denigrate the entire industry, that small group of tax advisors that sort of whisper sweet nothings into the ears of wealthy people and corporations about, we will help you avoid paying tax and we got a scheme for you, and the holy of holies actually making profit so that it actually doesn't physically exist in any jurisdiction, so it can't be taxed anywhere. They play a really negative role in companies and individuals paying tax as they should. And there is more to go on that front. With all those changes that have taken place, the ATO in Australia largely argues there's not a lot to see now in this space. We think there probably is. The ATO, there are things they can prosecute and there are things that corporates can still do that are very hard to detect and very hard to actually bring to a court. I'm going to finish by just pointing out there are 2 things though, 2 issues I'd highlight in this area of international taxation and about really wealthy individuals and large corporations. So one is the complexity that keeps ordinary people out of the discussion. This is like the Wizard of Oz type arrangement, and we end up with language terms like stapled securities or patent boxes or hybrid mismatches, transfer pricing, thin capitalisation. If you know any of those terms and actually know what they mean, you probably are a tax nerd. But for the majority of the population, you're locked out. And while we might be the 99%, I can guarantee you when it comes to negotiating around a lot of these sort of measures as they go through Parliament or have to be negotiated with departments, those numbers are reversed. The advocates for the corporates and the wealthy individuals make up the 99% of the lobbyists, and community reps make up 1% of those trying to argue the public interest. The other point I will quickly finish on is, with all these changes, the big group that has lost out of the Global South governments. They have largely not benefited from most of the global reforms. A lot of the reforms Australia did would defend itself. It has done some fantastic things to benefit developing countries, but by and large, they have lost out, despite, there is a program, Tax Inspectors Without Borders, that's helped developing countries in the last 10 years get an extra $2.3 billion worth of revenue, but $2.3 billion with all that's being cheated is a drop in the lake. So at this point, I will hand, so Josie is going to touch on that, and Josie Lee, who's from Oxfam and has been a campaigner for 20 years, and Grantley Taylor, Professor Grantley Taylor, who's from Curtin University and previously worked in the mining industry in the ATO, and the last 18 years has been an academic at Curtin University, is going to talk about his research recently about how have those reforms actually impacted and had benefit for dealing with tax avoidance. And then hopefully we'll have time for questions. So Grantley, you're up first.
Great. Thanks very much, Mark, and thank you to the Tax Justice Network for the opportunity to be part of this panel. So I do a lot of research on large data sets, looking at Australian corporations and also US corporations. So something that typically involves 30,000 firm year observations over a 10-year period. And we do a lot of statistical work on detecting various forms of tax avoidance. So from that work, I can say that international tax avoidance by multinational corporations is effectively live and well. It's a persistent issue across the Australian and global taxation and economic governance landscape effectively. So a lot of this involves, so I'll go through just a little bit about some of the mechanisms involved first, for those that may not be a tax nerd as such, and then have a look at how some of the recent provisions or recent changes to the provisions have been effective in curbing international tax avoidance. So international tax avoidance typically involves exploiting mismatches or gaps within a tax system, or exploitation of differences or arbitrage opportunities across different taxation systems. And from my research, which has demonstrated continuation or persistence of international tax avoidance as reflected by lower levels of effective tax rates or large differences between accounting income or financial income and taxable income, is typified by a number of mechanisms. So some of the more common mechanisms include income shifting, which Mark alluded to, and that involves allocation of income to lower tax jurisdictions. For example, you might have a pharmaceutical company or a technology company which has an affiliate or a subsidiary domiciled within a low tax jurisdiction. This might be an offshore financial center or a tax haven at the extreme. And a lot of the income generating activities have been reallocated to that particular jurisdiction, irrespective of the level of assets or income earning potential from a particular jurisdiction. So there's a real match in assets or revenue generation and the economic activity relating to that, and the place in which that income has been allocated for tax purposes. And then another example is transfer pricing. So we do see a lot of evidence of multinational firms operating through Australia where there's been manipulation of fees or prices of goods and services allocated between entities, and such that, again, more income is allocated to the lower tax jurisdictions and tax-deductible expenditure allocated to those higher tax jurisdictions, which now includes Australia as well. So a lot of these transactions are undertaken on a non-arm's length or a non-commercial basis. Another tax avoidance mechanism typically is the use of tax havens or offshore financial centres, and this involves allocation of income to those jurisdictions which are typified by nil or no or very, very low taxation rates, lack of information exchange, and also have got very weak regulatory or legal environments as well. And then finally, another common tax avoidance mechanism is thin capitalisation, also alluded to by Mark, which involves the excessive tax deductibility of interest expenditure relating to loan fees and promissory notes and other forms of debt instruments which have been allocated to a particular jurisdiction as well. So from my research, these are the common forms of tax avoidance, and they typically generate lower effective tax rates, both in terms of accounting terms as well as cash effective tax rates as well as those larger differences between accounting income and taxable income. And a lot of this is evident within the financial statement information provided within publicly listed financial reports as well. And in terms of then, has the recent legislative changes or activities particularly undertaken by the ATO or global taxing authorities, have they been effective? Well, in part, there has been increased effectiveness. So if you look at the tax deductibility of interest expenditure and we look at the Chevron case, we see that very early in around 2005, the ATO started looking at the Chevron case and the excessive allocation of debt to Australia, even though a lot of those funds were borrowed in other jurisdictions, including the US itself. And this was, there was a departure in terms of the level of debt allocated to Australia and then the level of economic activity and assessable income earning activity that is actually undertaken in Australia. So a consequence of this, from July 2023, the ATO and Treasury together introduced new provisions relating to the thin capitalisation provisions. So instead of relying purely on the safe harbour debt of the former thin capitalisation provisions, they now have three additional tests which a firm can choose one of and apply consistently. And these are more aligned to assessing whether the level of debt from which interest expenses are deducted within a particular jurisdiction, Australia, are more closely aligned to the level of operations that have been undertaken here, as well as the level of assessable income earning activities undertaken in Australia. So they're more aligned to the satisfaction of the principle of the arm's length debt usage as well, which is consistent with the OECD norms and expectations as well. So this appears to be a very good piece of new legislation that's come in, and more closely ties in the economic substance and the legal form and the resulting tax deductibility of industry expenditure occurring within Australia. So I think that's worked is working well to some point. Also, the OECD's base erosion profit shifting, BEPS, or as it's often abbreviated, appears to be working well in terms of aligning the compliance efforts of OECD countries in terms of dealing with rules relating to the interest deductibility of debt, the the pricing of goods and the provision of services and the consistent methodologies applied, and also the country-by-country reporting as well. So this has enhanced transparency and accountability. So this appears to be working well as well. And as Mark alluded to, the automatic exchange of information, not only tied into the high wealth individuals, but also corporations in terms of the voluntary exchange of information across jurisdictions, particularly financial institutions, and from that they can pick up anomalies in terms of the more severe elements of tax evasion. So that also appears to be working well. We've had a look at the effect of the Tax Cut Job Act in the US, and some of those, okay, 1 minute, those provisions as well, and the global intangible low income provision, which is brought in, which taxes global intangible asset income, appears to have diminished firms' incentive to use tax haven jurisdictions. Just to wrap up, so tax avoidance is continued, and I think a lot of this is relating to the digital financing, which has provided instruments for firms to obfuscate the flow of transactions, so the hiding of the source and destination of capital flows, and also facilitating the allocation of income to lower tax jurisdictions as well. And in turn, the whole process generates intangible assets such as intellectual property, which is itself hard to value and can easily be transferred at some form of nebulous amount to generate an inflated figure. So I think my last minute's finished. So thank you, Mark.
Thank you.
So today I'm going to be talking about how international tax cooperation can help address inequality and poverty globally as well as in Australia. I wanted to start by talking about the global inequality problem. We have heard a lot yesterday about what's happening in Australia, and I think it's really important to set the scene in terms of the global situation. So today we've heard obviously that the wealthier, ultra wealthy are getting wealthier. To put this in a global perspective, the billionaires last year got $3 trillion richer. The world's richest 1% now own 45% of global wealth. Meanwhile, 44% of humanity, that's 3.5 billion people, still live below the World Bank official poverty line globally. That's about $11 a day US. 700 million people live in extreme poverty. So if current trends continue, we're going to have 5 trillionaires this decade, while it will take 229 years to eradicate poverty. So we have a huge challenge here, and the system is clearly failing. In Australia, we have a similar trend, unfortunately. Since 2020, Australian billionaires have grown their wealth by $128 billion. There's a new billionaire every 3 months or so in Australia. Meanwhile, the rest of us have endured a cost of living crisis. If you think about the Sustainable Development Goals, which are a critical global collective goal for dealing with poverty, by 2030, they're looking to, eradicate extreme poverty, ensure everyone has basic access to healthcare, education, water, and climate action. And the United Nations Development Programme has shown that we are about $4 trillion short of having the funds we need to achieve those global sustainable development goals. And to put that in perspective, sorry, throat's gone. Overseas development assistance, aid, globally, totals about $223 billion US. So we are trillions of dollars short of where we need to be to achieve the Sustainable Development Goals. The kind of funds that we're talking about are only about 1% of global wealth, thanks. And yet, governments are not stepping up on this issue. And Australian government is one of the lowest providers of aid in the OECD. So one of the critical ways we can fill the gap in finance needed, of course, is tax. And one of the clear benefits of tax is that countries who raise it can spend it on what they think is important and not just on donor priorities. So it's very empowering as well. Just to give you some broad brush figures, and I know Jason's going to go into a lot more detail about some opportunities, but research done by Gabriel Zucman, French economist, last year showed that globally billionaires, there's 3,000 of them globally, and that they have an effective tax rate of 0 to 0.5% of their wealth. So our progressive tax system globally is failing us at the very top of the income spectrum where it's most needed. We've seen that with the latest figures we have from 2022, multinational corporations shifted $1 trillion into tax havens. That's $500 billion in lost tax revenue for governments. And that includes many low-income countries where a lot of people, spend money as well. So this is sort of a big problem that, we know corporate tax rates are just far too low. So I want to talk today about 3 huge opportunities for global tax reform that have sort of surfaced in recent couple of years that could really help to deal with this problem. Firstly, I want to talk about the new UN Tax Convention. So for many years, the OECD controlled international tax discussions for about 60 years, in fact. But they have really failed on the whole. They've made some small incremental changes, but on the whole have failed to address tax avoidance. We've seen that 3/4 of tax avoidance actually originates in OECD countries still today. And so the African group has led globally an initiative to set up a tax convention at the United Nations. And in August last year, 110 countries voted to establish it. So it's discussions now underway, and in the next 2.5 or so years, hopefully we'll have a convention established to be ratified. And unfortunately, OECD countries, including Australia, did not vote for that. However, since that, they wanted to keep the power with the OECD, but since that moment, Australia has, as has other OECD countries, been participating actively in the discussions. So they're going with it, all except, of course, the United States, who once Trump became leader just a few weeks ago, walked away. But that's necessarily a bad thing. What the UN Tax Convention could achieve is what people are calling the democratisation of tax globally. It's a huge opportunity to shift the power balance globally on tax and who sets tax rules and what tax is agreed globally. It could shift the power away from multinational corporations and wealthy people towards low-income countries and people in low-income communities if done correctly. And they have actually just decided they won't go with consensus decision-making, but with majority, which means the majority world can push through these decisions, which is a really good thing. They've got a couple of protocols underway which will look at cross-border taxation. So actually people have to pay taxes where the profits are actually generated, and also on dispute resolution. So that'll be really important. Another area where there's a huge opportunity for progress is actually at the G20. Last year, the Brazilian presidency decided to make inequality the heart of their agenda of their presidency, and they commissioned Gabriel Zucman to do research in this area of billionaire tax avoidance, and that's where he found, the low tax rate paid by billionaires, and recommended that a wealth tax be agreed globally of just 2%, but that would raise something in the order of $200 to $250 billion from just 3,000 individuals. that's something that Australia did sign on to. There was a declaration made at the summit at the end of last year, and where countries agreed to cooperate to effectively tax the ultra high net worth individuals. That's the words they're using. And so that's a huge step forward that Australia is part of, and we really hope to see what happens and unfolds. Okay, and the final area where there's a huge opportunity for reform at the moment is in the carbon pollution space, taxation space. At COP28, France, Barbados and Kenya set up what they're calling the Global Solidarity Levies Task Force for People and Planet. And they are pushing for agreement at the United Nations climate talks for working together to establish some carbon taxes. They're exploring different options of fossil fuel levies or profits taxes or different things, but they hope to land an agreement at the end of this year. Also at the International Maritime Organization, they've been looking at making shipping levies, and that has matured as of this conversation, and we anticipate in the next month or two that they are going to agree finally to a shipping levy to address the pollution. It's a pollution levy for those shipping companies. So we're seeing progress on that space. And just to conclude, I'll say that all these international processes provide a huge opportunity for us to actually tackle the power imbalances and the inequality in tax revenue, and that Australia can play a leadership role, not only in these negotiations and playing a very constructive role there, but also in being a first mover to implement them here at home. So we really would encourage the government to do that.
I think it's still morning. Good morning, everyone. I want to just start off by saying it's a huge honor to be here with all of you talking about tax. So it's very exciting, and tax is not a boring subject. It's not a burden. It is the key to civilization, as we heard earlier today. And I'm especially honored to be here in Trades Hall. I've been working with and for the global trade union movement since before the turn of the century, and the work that I do now is very much in line and funded by, in majority by trade unions. So we want to bring the union movement into the fight for a fair tax work, and we see ourselves as a bridge between the tax justice movement and the trade union movement. And we know that the trade union movement has made huge changes in society in the past, and we want to bring that energy, those resources, that spirit into the fight for a fair tax system in Australia and globally. So just want to throw a few things out there in a broad sense to stimulate some discussion, and then I'll try to give you some detailed examples of the type of work that we do. But we work very much at the intersection between union issues and tax issues, and we try to expose multinational tax avoidance and companies that are getting government funding to provide services or supply goods, and look at what they're doing with the money that they get. And use that to advance union interest and advance the cause for global tax reform and revenue for funding those services. And just as a general point to start with, if you're a worker in a multinational company and the multinational company has convinced the tax office that it's broke and not making any money in Australia, how the hell are you going to bargain for a better wage, better conditions? You can't, because they, on paper, have said that they don't have any money, and they've used some of the techniques that Grantley explained to shift money offshore. It's very common. All multinationals basically are doing this, some worse than others. And obviously, if you're a public sector worker providing services or a private sector worker providing outsourced public services, you need that money to pay for those services that we all rely on and want to see more of and better of. So I just want to put it out there that really the problem that we're talking about here, well, two things. Let me start by saying that we're talking about broader tax reform over these last 2 days. We need to see full-scale reform of the tax system in Australia and globally. But I want to put it out there that I think that galvanizing public opinion, bringing people with us, the focus on multinational tax avoidance is the way to do that. And we know that this resonates with people all across the political spectrum. To be honest, the rise of populism and the likes of Donald Trump is in part driven by the failures of globalism to deliver for working people. And we need to come out and address that full on and take it on. And I want to put it out there that the problem that we're facing, the reason why we all have been talking about what the reforms are, we can have a lot of really good ideas in this room about what we need to do, and nothing's happened. Well, we've had a lot of successes, and I want to come to those as well. But the problem that we have is corporate power. And I think at the fundamental base of everything that we're looking at, if we don't address and focus on corporate power that maintains the status quo, that benefits corporations, that allows billionaires and rich companies to not pay their fair share, not pay the obligations, not pay for the resources that they need in order for their businesses to thrive, we're not going to solve this problem. And so I think we need to keep in mind that the corporate power and keeping things the way that they are is a core problem that we have to focus on. And there was some discussion yesterday around stories, and I fundamentally agree that we need to tell stories. And yesterday we heard stories of people, their lived experience in dealing with services. And that is an incredibly powerful story, and we need more of those. The stories that I want to tell are the stories of the villains, the bad guys, because I don't think we can get people to focus on minutia of tax reform issues without explaining who's benefiting and who's getting what and who's stealing our money that should be paying for our public services. And we just need to call that out for what it is. This is theft of the common resources that we should be using to make all of our lives around the world better. And I'll give just one concrete example flowing on the billionaires here. Elon Musk, this is the richest man in the world. He just bought himself a position as the most powerful person in the world through money. We should be taxing the hell out of that guy and taking his income so that he can't be a toxic force for democracy around the world. So I'm going to switch from the overall picture. One last general comment I want to make is that I think we should need to think about less think about poverty and more think about greed. The problem in the world we have is corporate and personal greed. Poverty is a symptom of that greed. And so I think sometimes we need to sort of reframe how we're thinking about things and think about greed as the problem and poverty as a symptom of that. So I'm going to switch from broad topics into very short examples of corporate tax avoidance. So I want to just mention Chevron, and I think this is a huge success story because Chevron now pays more tax in Australia than they do in any country in the world, including the United States where it's based. They are the fourth largest taxpayer in Australia now, and that's due to campaigning by unions, by civil society, and by reform. I'm going to end, I'd like to go into some more examples, but maybe we can come back to some later. But I do want to end on a very triumphant note in that this year, or last year, Australia passed public country-by-country reporting. And how many people, just show of hands, who knows, have anybody heard of this? All right, so this is the best tax transparency legislation for multinationals in the world. And Australia did it first, and we're setting the example for everybody else to follow. We will know beginning next year how much money, how many workers are paid in the top 40 tax havens around the world by any company that has $10 million of revenue in Australia. So we have some very good successes, and that sort of sets the stage for a new global standard for multinational tax transparency. And you can't fix the problems if you can't see the problems. And so transparency is the first step here.
Thank you, and congratulations, Jason, Mark, Grantley, all of you, Josie as well, because that was a long-term lobbying project to get those laws through, and it's a delight to see Australia leading the world in that space, and not coincidentally because of the efforts of the people on stage here today. Got some great questions for you. I'm going to start with this one, because a few people have posted a variation thereof. What is the impact of the tech overlords taking control of the White House on the prospect for any tech taxes in Australia?
I'll jump in, sorry. Look, overall, I think this is, as Josie alluded to, a positive step, to be honest, because the US has not been a productive force in global tax negotiations, and to have them exit the stage creates open space for people to do and experiment with lots of different things. We would not have had the OECD conversation on Pillar 1, which is what was attempting to tax the big tech companies, if it had not been for 30 countries around the world imposing their own digital service taxes. So with the US out, we're going to see a return to that. And we need a little bit of chaos. We need a little bit of unilateral action in order to drive ultimately multilateral change. So I actually see it as a positive. And I think, I mean, Canada, already before Trump election, Canada announced a digital services tax, and we're going to see it being reintroduced in many countries around the world.
So just adding to that, just to be clear, that the digital services tax referred to individual countries taxing the tech companies in their jurisdiction. So they're saying, if you're using our people to collect data, we're going to tax you for your operations here. The tech companies hate this because the risk for them is all these countries introducing their own taxes will mean their profits get taxed multiple times. And there's nothing a corporate hates more than having their profits taxed more than once. So that will drive. Now, the counter to that, of course, will be whether President Trump decides he's going to levy tariffs against every country that introduces digital services. I think there's a limit to this though, because tariffs obviously hurt the country that imposes them, as well as the country they're targeting, and their own businesses will suffer as a result of this ongoing notion that I'm going to tariff everyone into compliance.
I'll just add to that to say the UN Tax Convention, the first protocol that they've agreed to negotiate cross-border service taxation is directly targeted at the digital and tech industry, because that's one of the areas where it's most mobile. There's less actual infrastructure on the ground, so they can just ship their profits all over the place. And so that's one where there's a huge, they hope to have agreement in the next few years, a global agreement on how they manage that now, and that would be a really big step forward.
Thank you all. I'm going to combine two questions that are similar here. The ATO says the corporate tax gap in Australia is now only 3 or 4%. Is this accurate, or do you think more corporate tax is being missed?
Yeah, I'll answer that one. So we've undertaken some recent research on tax gap, and what the ATO is referring to is what the expected tax revenue should be, all else being equal, based on good levels of compliance and what corporations are actually paying now. So looking at data, and some of this is publicly available, so you don't need proprietary data at all. The gap is significantly larger than that. So if you look at differences in the levels of accounting profit by a corporation within Australia, and which obviously includes group profits, so all affiliates of subsidiaries globally, not only those within Australia, and the taxable income, so the income tax expense they pay on that at 30%, there's a substantial difference, way more than 30%. And so recent research, looking at a data set from 2005 to 2022, we can see that the gap there is way higher than the 3% purported by the ATO, and accounts for $2, $3, $4 million in difference there, hundreds of millions of dollars difference. Yeah.
That's a very clear answer, Jason.
Let me just give you two very specific examples of companies that have where that gap, there's a gross underestimate in that gap, because that's based on what the law says now and what companies can legally get away with, and we need to close these loopholes. But if you take a company like Microsoft, one of the largest companies in the world, we know from the data that their profit margin in Australia is about 1.5%, yet globally they report about a 40% profit margin. And so there's some, obviously there's some explanation. I'm not saying that that's all profit shifting, but you can guarantee that a significant chunk of it is them shifting profits through legal means offshore. Another example is, and I'll just say that, look, US multinationals are typically the worst. Multinationals in general are worst, and Australian companies are much better taxpayers than the rest. So I think in terms of building alliances, we have a lot of small business, responsible business, and Australian businesses that we can work with in order to tax the larger problem of these huge multinationals. There is one Australian company that I'm going to highlight as being not in that category, and that is a company called CSL, so different from the CSL that was being discussed this morning, but this stands for Commonwealth Serum Laboratories, a privatized public entity, ASX 30 company. We looked at them because they were the only Australian company to come out and lobby publicly against public country-by-country reporting, and we wanted to know why. We found out that per worker in Australia, that their Swiss workers had 10 times more profit than their Australian workers. Go figure.
Maybe we should renationalise it. Anyway, I'd like to, we do need to bring Peter up, so please join me in thanking Josie Lee, Jason Ward, Grantley Taylor, and particularly Mark Zirnsak, who along with Tom and Catherine was one of my original co-conspirators on this event. Mark, thanks so much for all your help and support. Pete, over to you.
Well, these are actually Mark's options that I think they've all come out in the conversation, haven't they? Again, 100 points. Where do you think the emphasis should be? So draw your weapons. I'm hoping it's going to be live this time, so it's not so laggy. Someone put it in and we will see. But making global tax rules fair for all governments, taxing multinational corporations in Australia, taxing billionaires, and reining in tax advisors. It's like kind of, it's all of the above, but where is the emphasis? Where is the theory of change? And the question that I don't think we got to, which still gets me always, is on that PwC, how was the government getting those guys to help them write the tax rules in the first place? But anyway. All right, we'll keep those coming in. Give it one more second, and that will all be part of building our report out of this event as well.